It is time for caution. How do I know? Well, you're looking at a daily chart of the NASDAQ, which was down 60 points today, or 0.33%, closed at 18,180. I just want to point out here that the NASDAQ is, you can see it's been in a strong uptrend for, I don't know, 11 or 12 weeks or so. But what's more important to me is the daily chart right now, and that it's sliced its 50. That bar on Thursday is just not to be ignored. That scares me. I believe could be a foreshadowing of something, I'm not going to say more dangerous, but could pull back to the 50 here or even further, as we know, and we've seen before here in recent times. When it slices the 21, there's trouble. And today, it sliced its 21 on Thursday. On Friday, it pulled back up to it, got rejected. Today, same thing, rejected twice in a row, and it closed 0.7% below the 21. That's, I don't know if I should say a yellow flag or a red flag. I don't know if you're in racing. I guess yellow flag is caution, at least caution. There's always that trap door scenario where you see, he's hanging around like it did here, and then all of a sudden you get that one day down 3.26%, and you just don't want to hang around for that day. Like here, it had this bar back on July 11th, had, 3 days where it just kind of hung around, couldn't make a new high above that 18,671. Then you get caught in this trap door here down 2.77%. So you kind of want to avoid that. I sell my laggards, if only up 2, 3, 4% in something, they got to go. If you're up, maybe, I don't know, 75, 80% in something like an app loving and it's still hanging around here, but it sliced its 10 today and it's got earnings coming up. You got to practice some risk management there. Yeah, you want to hold it, but you also don't want to take a big hit if it comes down and sells off on earnings. That 50 is at 129. That's a $30 move lower. So just wanted to point that out here with the index stalling, and I would say even worse than stalling. It's showing signs of cracks, and I'm seeing some cracks in some leaders here, and I'm going to show you that in a minute. Leaders from the most recent rally, So anyway, the Nasdaq, like I say, closed at 18,179. Made a high last week of 18,785, and has done nothing but sell off ever since. So be careful, folks. You don't want to go through something like this again, like we did back in July, August. And anyway, that's my 2 cents. And I practice what I preach. I trimmed a lot of stuff and just trying to play it safe. Don't want to give the gains back. I'm not saying that the markets are going to crash or anything, but if it just goes through one of these, there's a lot of pain in this, especially with your growth stocks. This is a 16% correction here. So your growth stocks are going to correct, 30, 35, 40%. You don't want to sit through that. Same with that little nice little pullback there from 18,017 to 16,668. So anyway, be careful out there. It's definitely a sign of caution. So don't go all crazy. I only had 3 stocks on my ready list because I'm not in the mind to buy until after we get through, this election. And, Jerome Powell's I guess he's going to lower rates this week. We'll have to wait and see. Nobody knows, but it's always volatile around FOMC time. Apple, this is strong stock leader, and this is selling off. Berkshire Hathaway has sold some more of the stock, and to me, that's one of the three-legged stool that it had going. Is it's in every fund, so the indexes we're buying. It's got a huge stock buyback program, so the company's buying, and you had Berkshire buying with Warren Buffett, so he kicked out one of those legs of the stool here as he keeps selling. So I do not like that below the 50. That's sliced here with above average volume. That's adios muchachos for me. This is a reaction to an earnings report also. I'm not saying that Apple's going to crash and burn or anything. It's just that it's showing weakness now. So you got to have caution. I mean, if you're in this thing, for the long term and you've held it forever, I think you're fine. But if you're swing trading, this thing looks terrible below the 50. So I just pointing that out. NVIDIA joining the Dow Jones Industrial Average. I showed the folks at MC Stock Charts today. It's not a reason to buy the stock. It's not a reason to sell the stock. It's just it's going into an index, and that's about it. What is going to make this stock move is the earnings on November 20th. So you have to wait till that. I think a lot of eyeballs on this, and that chart looks good. I think a lot of folks are thinking this thing's going to rip higher, but it's probably going to shake you out and cause a lot of indecision between now and earnings time. So there it is on the weekly, just consolidating here since I don't know, got about 4 months now. Uh, that base, and it's a late stage base, as you can see here. Yeah, since June 21. So this is going to probably just go sideways for a few more weeks, at least till the 20th, which is 2 weeks from Wednesday. And you can see lots of bases here. So this is there's a double bottom, stage 3, and here we are at stage 4, late stage base here. So, it definitely could falter. Later stage bases are more prone to falter. So anyway, um, NVIDIA's, the Nasdaq's going higher, and the AI revolution is going to take years and years and years to play out, which I believe it will. This stock is going to be fine, longer term. I'm just talking shorter term. It could undercut that prior low of 90, certainly inform a new base, but we'll see. I just wanted to point out it's going in to the Dow Jones Industrial, replacing Intel, which you could see has had a hard time for a long time. So Intel's coming out, and this is how the Dow Jones, remains strong and keeps making new highs. They kick out the junk and they bring in the stars, the all stars. And Sherwin-Williams, I was a little surprised with Sherwin-Williams entering. This is a chemical product, 94 billion market cap, so it's no small stock, and it popped nearly 5% today on that news. And it's replacing Dow is coming out of the Dow. How about that? And Dow's a 33 billion market cap stock now. So it's been weak for long, long time. Anyway, that's just routine stuff there, going in and out of indexes. All right. I just wanted to get to some earnings reports this morning that I had on my radar. This is TG Therapeutics. They reported pretty good quarter. They raised guidance and everything. This is based on a one-time licensing fee of about, I don't know, 100, gosh, I forget, 150 million or something. So it's kind of an anomaly. You just want to look at the growth, of the revenue growth, 44 million, 63 million, 73 million, now 84 essentially million. I think next quarter you could expect, 95, 96. So it's kind of incrementally building gradually, slowly, and market wants it to grow a little more rapidly. And we'll see. It's going to take a few more quarters, I believe. But I listened to the conference call this morning. They think they have a blockbuster drug on their hand. A blockbuster drug's got to do more than, I think you raised the 305 million in sales. So when you have 305 million in sales and you have a market cap of 3.7 billion, that's over 10 times sales. So this is already a pretty expensive stock, fundamentally. If you look at it technically, though, this thing's formed a nice cup pattern. All it did today was pull back to its 50, found support, and close at 68% of that daily range. So to me, that looks pretty good. Just a little shakeout there. But I think if you're going to sit in this one and expect, big returns, I think it's going to be a little more slow going. And you can see this cut pattern now, it's just handling out here. So, it looks pretty good to me. Obviously being down 9% on an earnings, but all it really did is just kind of come back to where it traded, a long, long time ago, about that old buy point there, right? It hasn't really done much. So, and even from, the recent gap higher back in August, it's still trading around that, 23, 24 area. So no great shakes, but it does look good above 26.41. I had this on my ready list last week. It popped Friday, is buy the rumor, then sell the news. So, TGTX so looks good. And I think longer term, if you're willing to stick with a stock, it's all about your personality and your time frames. And if you can tolerate, sitting in a stock going sideways while some stocks are ripping higher. You have to know yourself there. CEG, this is what I'm talking about, showing signs of cracks here. Some of these stocks that were leaders in the most recent rally are really showing signs of cracking. These guys reported today. It also went down on the news from Talon. The Energy Committee regulations are, giving them a hard time, which is nothing new. But anyway, so it's kind of like a double-edged sword. Actually, I should get to this in a minute. I'm going to lose train of thought. Anyway, those stocks were down today. All right, I am going through some of the earnings names that were reported today. And this is Marriott. Didn't have a very good immediate response, but closed it at 96% of the daily range, which is you want to see, but it's still, below its 21, which I don't like. I'm telling you, I just don't like stocks trading below their 21. Viking, they reported, big news on their drug, and everybody thought it was going to go higher. It's trading like $90 in pre-market. And that's why, just stay away from pre-market, man. It's can get you burned. So people were chasing this stock at 90, and it opened near 79. You can see 79.10 was the high, and it kind of just it had like a bear raid there. Yeah, it opened at the high, sold off all day. So a lot of shorts in that stock. And that's why, some people like shorts. I don't like a lot of shorts in my stock because I figure they know something more than I do. NGNE, this is another biotech stock that had news and popped 43%. So that's a sharp move. BNTX, they reported earnings, pulled back to the 50. IRON, another one had news, and one was up, another biotech stock, Disc Medicine up 24%. We'll take that. DigitalOcean, a software name that reported this morning, ay caramba, down 13.5%. So Wall Street did not like what they were selling. I'm looking at here at 18% EPS growth and 12% sales growth. So they've been pretty steady with sales growth, 12, 13%, but probably not a good day to report for DigitalOcean. The market is showing weakness. It's showing cracks. Freshpet, I don't know what to think about this company. I use this for my dog, but I don't like it as an investment. But anyway, yeah, it's got a 7.3 billion market cap with, less than $1 billion in sales. So pretty steep for that one. My dog likes it though. VRNA, another one that reported earnings, and let me see. Yeah, the nice 9% move. And you can see that ascending base where goes up and then it falls like 10% or more, rallies up, falls like 10%, rallies up, falls like 10%. Now it's got this little buy point there at 35.62. So ascending base are not all that common, but that one looks pretty good, VRNA. And then the last one, NSSC, NAPCO. They reported, and Wall Street did not like. No, sir. No soup for you, down nearly 11%. And this is in that cybersecurity, security safety with, Axon. Yeah, that group. Axon's been a leader, and it's starting to show cracks too. Below the 21, I don't like. And I am going to show you some stocks that are, were leaders of the prior rally after this summer earnings report. VST ripped higher up to 143, and now it's just falling out in between the 50 and the 21. I'm telling you that right now, I don't like stocks below their 21. And when they fall below there, they usually go to the 50 and sometimes even worse. So this one closed at 58% of the daily range. And it's 5.8% below the 21. So you got to be careful. There's some wear and tear on these. I mentioned Talon. They're the ones that got they wrote a letter in trying to be in compliance with the energy regulations. But anyway, we'll see what happens here. Probably just a bunch of noise, and it's going to be okay going forward. But you can see right there, it just closed a tick above its 50 and 3.2% below the 21. So it made that high of 197. It's just shown kind of weakness ever since. Can't get back above that old high. Some other stocks that, were showing, strength recently and have just fallen off. You can see Lilly. This is one of the drug names that have just been sold off. That thing looks pretty bad. Shark Ninja reported last week, had a real bad reaction, below its 50. Had an inside day today, though, as I guess the sellers may be starting to get exhausted here. But you could see there it's 11.7% below its 50. So yeah, that had a nice run. You could see it was surfing the moving averages. And I always say, you ride the trend until it bends at the end. And that's not a bend, that's what they call the old, the trap door. Just fall through the trap door. And that's a lot of pain. I shouldn't laugh. If you own that, that's a lot of pain right there. It's tough to take, but you just got to get rid of it. You don't hold and hope, right? Even the restaurant names are starting to crack. CAVA now below the 21. If you bought this thing back here before it broke out, you're sitting okay. But I'm a little concerned here. Closed below the 21. So I don't know. Some of these names that you have big big cushions in, you can afford to hold them. But you don't want to give profits back. Robinhood, which had this real nice move here, from 13 and up to 28. Now it's pulled back to its 50. Hopefully it finds support there. So that's one of the crypto names that were getting hit. And then Uber had a big run, and then kind of right here, 54 to 87. Now it's below its 50 and just above its 200. So there's a lot of cracks starting to show. I don't want to be too negative and go through all this stuff. I'm just saying with the NASDAQ where it is, with some of these former leaders showing cracks, you just got to be you got to practice risk management. I can't say that enough. If you're a swing trader, and like I say, if you're holding these stocks for forever, I mean, that's a different story. So all right, I'm going to move on. I got to get to some stocks that I like. How about that? Stocks showing strength, stocks that I like that. And I was going to have GoDaddy on my ready list today, but I didn't because I like this chart pattern here. It is a late stage base, but it's above its moving averages here, 2.2% above the 21. Yeah, and it closed up, over a percent today. So, but like I said, it's had a big move, and now it's forming this base here. So, yeah, you know, it's got a long way to fall, put it that way. If that base, is faulty, and you can see the big sell-off here, that bar. And so it looks good though, as it pulls back gently to a moving average, popped. I guess I was on earnings and then came back, but it's above its 21. So I like stocks above their 21. This is DoorDash, once again, just surfing its moving averages, doing nothing wrong. This is a big move on earnings up to 165 last week. Now pulled back, finding support though at the 10. It's 1.8% above the 10, 4.1% above the 21. So that thing's still trending nicely. But in this market, if the indexes want to, pull in a little bit, this one's going to get hit. So just beware of that. Deckers is another one that I like. I was going to put on the ready list, but I just don't want a lot of stocks. I don't want people to think that, wow, there's 20 stocks on the ready list. Man, we're gung ho. This is very much a time to be cautious here. It was up 2.6% today. It's got this nice cup with handle pattern. Once again, kind of a later stage base. This thing's moved for a long time. You got kind of a base on base pattern here. This is a real nice bigger base, kind of a nice symmetrical base. Trading tight, not too wild. So yeah, Deckers looks pretty darn good to me. Another one that I like is DUOL. It just made this run up and now forming this little box or shelf type pattern, if you will. Popped above it last week. I thought that might have been some foreshadowing. We'll have to wait and see. But it's got to break out of that box there. As long as it's above the 21, I'm okay with it, but I would like to see a breakout with volume. Now, I don't think we're going to get that until after Jerome Powell speaks this week. Yeah, it's still 1.7% above the 21. Spotify, same deal, just trading in this little box here. It pulled back to its 21 today, closed right at the 21, a tick below it, but still like this stock, but I don't I don't like if it's going to slice its moving averages. How about that? I like it if it wants to go higher, and the moving averages are trending higher, so it's got to stay above those for me to be interested. All right, GEV, one of the energy stocks that showing strength, and this one just pulled back to its 10 today, so it's showing strength. It closed at 33% of the daily range, but you can see it pulled back to the 10, and finished 1% above the 10. So that one's still showing strength. Texas Roadhouse in the restaurant group. This is one that hasn't been sold off yet. And this one just 1.1% above its 21. Brinker, this is a monster of the restaurant stocks, and Cake also just had that big move on earnings, now pulling back, allowing the moving averages to catch up. But it's so far above the 10 there, 3% above the 10. So the restaurant stocks are really hit and miss, because you can have something like a Wingstop that just sold off. And then you got something like Sweet Greens that still trading sideways, still above the moving average. It looks like it could go either way. A coin flip there, and I don't like coin flips. Some other names that are strong are the cruise lines, the Norwegian, the Carnival. These are all looking good here. Got that wedge pattern here on the Carnival where it continues to just, wedge back to a moving average and then pop. RCL Royal Caribbean, very nice, above the 21. We like that. What's not to like? Viking, I think that had a nice day today. Yeah, up nearly 1%, above the 10. You gotta like that strength above the 10 there. So especially with this market weakness recently. Um, so those look good. Of course, booking.com. This is my boomer retirement plan. These stocks are doing fantastic. The airline stocks are doing well. Delta, yeah, Alaska above the 10 there. Yeah, little pullback to the 10 today, down 4%. So we'll see if it gets support there. 0.5% above the 10. So those stocks look good. And then some of the computer software financial names, holding up well. This is PEGA Systems. And then GWRE, another one. Yeah, had the big move, but we've seen stocks like this. This is the trend and might be starting to bend at the end. So you got to be careful of the trap door, and always, always, always be mindful of your earnings dates at this time of the year. Anyway, that's it for me, except for I lie in honor of the great Steve Jobs. I have one more thing. And speaking of earnings, there's some stocks, doing well after hours following their earnings report. This is Palantir. Obviously, this has the ability to move the software names tomorrow. It's a 93 billion market cap, and it's going to tack on a little bit more tomorrow. So this one's going to be, I don't know, maybe, yeah, over 100 billion market cap. How about that? It was in the S&P now, and it's just humming along. Now, somebody was saying it was all-time high, and yeah, so that looks like a nice, actually an IPO cup with the handle base there from the IPO. So Palantir looks fantastic. Congrats to the longs there. SMCI, I don't know if they reported or not. They were scheduled to. They're a mess though with their auditing. They're going to get delisted. How about a story of SMCI from rags to riches back to rags? They're going to get delisted if they don't have an auditor sign a letter, and I don't think they're going to be able to do that. So yeah, this thing is going to be off the NASDAQ here in about November 15th. So they didn't give them a lot of time, and they've about had it. So a stock that went from, I don't know, where was this thing? It split 10 to 1. So $3 up to 122, 3 to 122. Now it's going to go down to, it's going to get delisted. So, that's the way it goes in the market. You can't get complacent, especially with these growth stocks. All right. So who else reported? Oh, WYNN reported a stinker quarter. Yeah, it's down 4%. They missed top and bottom line, so that's going to get hammered. Same with Cleveland Cliff. They have a colorful CEO, but he can't talk his way out of this one. They missed in the top and bottom line, down 5% after hours. I don't know if that's going to impact the steel stocks tomorrow. It might. It's only a 6 billion market cap stock. And then I've got to get to the semiconductor names because Astera Labs reported a strong quarter, up 17% after hours, which is a nice move. Thank you very much. And this is another one that people are saying it's an all-time high, but it's not. It was at 95 back in March. So this is an IPO stock going through its institutional due diligence phase. Now it looks like it's in its advanced phase, especially here above 80 tomorrow. We'll see how it moves. It's up 19% after hours. So that is a strong move there at $83. So yeah, nice move. NXPI reported. Yeah, down 5%. No bueno. LSCC, this is a semiconductor fabless, and it's down 9. So manufacturing and fabless, this is only a $7 billion stock, but still, anyway. All right, that's it for me finally. Except for I do lie. I have one more thing. I just got to say, there's an election tomorrow. Please vote. You know, people sacrifice and give their ultimate sacrifice for our privilege to vote. So just vote. But don't be too dogmatic in your thinking when you're voting. A lot of people get really emotional about, any position or a certain candidate, but just know that the market doesn't care about your position or who you voted for, because in 2021, it was thought that the solar stocks would do really super well. Joe Biden's coming in, he's a green energy guy, and solar's going to kill it. Well, guess what? It didn't work out so well if you own Enphase. It was down 59%. So yeah, I thought solar would do well when, Biden got in too, but it didn't. So you just gotta, be open-minded, be flexible. If you own this, you'd have to sell it when it slices 50 way back in the day. If you're looking at Enphase on a weekly, you could see, the weakness right here. First way back here when Biden got in, January of 21. So there you go. It was $214 stock. Did okay for a while, right? Just went up to 339, but man, the last couple of years, and that's sorry if you're long. I do know some people who own Enphase and work there, but yeah, just don't be too dogmatic in your approach to the market, because this is the market telling you that they don't like Enphase, and there's just a lot of sellers here. And it's really, I thought really it was going to make a bottom here around, this 100 area, 101, 98. It never did. And it just keeps going down. Now you think, God, the sellers have got to be exhausted here, at this, 79, 80 level. And it's just, I don't know, it's below all the moving averages. But my point is, just be open-minded and flexible, and don't be too dogmatic about, if you think a candidate gets in and one area is going to do great, it might not. So just stay open-minded and flexible, and please vote, because that's it's a privilege, and you're right in your civic duty. Anyway, thank you for watching. That's it for me. We'll be back tomorrow. It's Jerome Powell's going to have a decision on interest rates this week, and we have the election. So there's a lot of headwinds here in the market. So you got to be really cautious. We know when Powell speaks and when he makes a decision on rates, the market's going to gyrate up and down a lot. So if you have stop losses that are tight, you're likely to get stopped out, and that's okay, because you can always buy a stock back. All right. So anyway, thank you for watching at mcstockcharts.com. We never give up.